Welcome to Markets Now. I'm Michelle Rook with Tomm Pfitzenmaier, Summit Commodity Brokerage. We ended lower in livestock and crude oil futures on Friday. The grains were actually mixed. And, Tom, let's start off talking about the grains because we had nice reversals on Thursday, but we didn't get a ton of follow through. So no confirmation anyways of those reversals.
Yeah, that was nice. I mean, especially in corn, you go down and make new contract lows, come back, close higher. Yeah, on the opening on Friday morning, you had a nice follow through buying that took March corn back up to test resistance at 450, and then it just ran out of sellers, and down we came to close roughly steady. Now, the same thing happened to a minor degree in beans. Beans didn't make new contract lows, but they made new lows for the move on Thursday. Popped up a little bit, had some nice follow through buying again Friday morning, and then failed and came back to steady also. So, and we did have in corn on Friday a pretty decent export sales number, which was you would thought would have been a little more supportive than it was, and maybe that was part of the reason we popped up a little bit right after the opening. But on soybean, meal closed lower, bean oil closed lower once again, so you just had no help from the products on the soybean side.
Is the mentality shifted now, Tom, to the funds kind of selling just about every rally? Is that why we couldn't hold the strength on Friday?
Yeah, they're short. They're defending those positions. They've been short on corn in particular for quite a while, and it's the old adage: you keep doing what's working, and what's working has been to sell any rallies that come along in the corn market. And I think with the weather sort of somewhat improving in Brazil, they're beginning to take that same attitude in soybeans. I mean, they're short soybeans, and building those short positions. So yeah, I don't know. That's tough. At some point they they will be done doing that, and the market will reverse on them. I'm not sure what's going to make that happen in the short run, but something almost always does. Hopefully that happens at these kind of prices, and we don't have to go a lot lower for that to happen. Although that certainly is a possibility given the large inventories we've got in corn, given that the USDA as well as CONAB did not seem to want to lower the soybean and corn production numbers for Brazil all that much. We're going to have a record crop in Argentina as the way it looks. And then they bumped this bean carryout. Everybody's been a little concerned about that being tight. Well, that kind of loosened up a week ago too. So I don't know. There's a lot to overcome, and at the same time, we're making not new highs, but making new recent highs for the move in the dollar index, which is a headwind for all grains and livestock.
Yeah. So funds are not as short historically as they could be. So when do they when do they get out of their shorts, or do they keep going short here in these markets?
Well, like I said, the fundamentals aren't all that positive. So I guess they're going to keep selling it until selling doesn't work anymore. And we've had some commercial interest in the corn market, which is a little bit encouraging. On the other hand, on the upside, you've got the farmer sitting on all this big inventory that at some point is going to have to move. Now, I assume that this break in prices has probably softened them up a little bit, and they've kind of got some of the $5 stars out of their eyes. But that still is a big inventory that's sitting over the market that will eventually move and probably put a cap on rallies that amount to much.
Yeah. Do we know how much farmer selling has been done here after the first of the year versus what's yet to come?
I don't have a lot of quantity on that, but everybody you talk to says very little move. And a lot of that, like I said, is due to the weather. I mean, nobody just wants to get a truck out. They have to dig their bins out. They don't want to do any of that, especially with the prices not very good. So I guess we'll have to see. I know their inventory is substantial. I guess I can't quantify what exactly it is.
Yeah. You would think with the better weather, maybe we'll see a little pickup in farmer selling here maybe next week.
Yeah, and some of these end users are offering some deals too to try and entice people with delayed pricing and some little better basis or deferred basis or so there's a lot of things going on by the end users to try and entice grain out of the farmers' hands, and there may be just enough of that to kind of keep everybody satisfied for a while.
Right. So when you look at the weekly closes, it felt like a really bearish week, Tom, but corn was only down about a penny and a half on the March, and March beans were down only 11. I hate to call that a victory, but at least it wasn't as bad as it seemed.
Yeah, that's for sure. I mean, it seemed ugly all week long, and partially because we made that new contract low on Thursday that really put a negative tone on a lot of things. But it was nice to see it come back here at the close Thursday and at least make an attempt at a rally on Friday, which was kind of nice to see. Historically, when you have a bearish report like we had a week ago, there's usually a little follow through the following week, and that's kind of what we had. So now we can come in Monday morning maybe with sort of a fresh look at things, start evaluating South American weather to see if that's positive or negative, see if any export sales start to pop up here for us, and maybe take a look at the market with some fresh eyes.
Yeah, now that we get the report hangover done, maybe we can start moving on and focusing on something else.
Right.
You talked a little bit about commercial buying interest, and we did see a little bit of China business on Friday in soybeans. But overall, do you think we're down at a value level where we might start to see some more business?
Maybe. One of the problems on the soybean side is soybean meal has been leading that soy complex for quite some time, mainly because of the big problems they had in Argentina last year. They tend to be a big processing country. They tend to export a lot of their beans as meal, and they just hadn't had any to export. And so the U.S. meal market has really benefited from that. Well, now all of a sudden you're looking ahead, seeing a record crop coming in Argentina, which means they're going to be back having meal available. And I think the market's starting to anticipate that. So you're going to, I worry that we're going to see some of that leadership that we've had from the meal start to fail
Yeah.
here as we go into the spring.
But I will say we had rumors of export cancellations by China of soybeans kind of floating around this week. So to see them come in and buy at least was a little bit encouraging, wasn't it?
Well, some of their buying was just switching too from unknown to
Okay.
or unknown origin back to Chinese origin. So that may not be quite as good as it looked right at the surface.
And crude oil down for the week, but the dollar index, as you mentioned, we had a strong week there. Do you anticipate that's going to continue to move higher, and will that continue to be a headwind for the grains?
Well, of course, the dollar index and what it does is based mainly on differential interest rate differentials. So, if you think if you think the Fed's going to cut interest rates and nobody else is around the world, that weakens the dollar. However, if you think if they're going to hold tight on interest rates, keep them strong, and everybody else doesn't change all that much, that's going to be bullish for the dollar. So I guess it depends on your perception of what the Fed's doing and what your perception of as on whether they're controlling inflation properly, whether you think the economy is going to have a soft or hard or whatever landing in 2024. So there's a lot going on there. Now, if you have softening of the economy, you're probably going to start, and I think this is partially what's going on in crude oil. That everybody's a little concerned that the crude oil demand is going to suffer. You got all this dust up and all this mess over in the Middle East too going on, which would you would think would have been more supportive than it has, which tells me that there's some concern on the oil traders' part about the strength of the economy and whether you can support the energy demand is going to be suffering a little bit.
Yeah, that's a good point. It's been hard to believe we haven't put more war premium into the crude oil market. All
Right.
right, thanks for joining us. Tomm Pfitzenmaier with Summit Commodity Brokerage, and that is Markets Now.